What did you do as the VIX went to 50? Were you like were the old guys getting the buy tickets out of the vest and buy?
Well, I think we did almost nothing. For us, it comes down to business fundamentals, and underlying cash flows haven't changed. We entered the year with a reasonably optimistic view on risk assets, driven by business and consumer confidence and lower corporate taxes. I think it was a reminder that the volatility we've experienced over the last 5 or 6 years is unusually low, and conditioning our clients to the idea that was more cyclical versus secular has been a challenge. The reality is drawdowns of 10% usually happen a couple of times a year. We'd gone almost 400 days without a 5% correction.
Right.
So volatility is a reminder that in equities, it's not always straight up to the right.
Within this, from the lower left to the upper right, as Mr. Gartman would say, within this is your research notes, which are always interesting to read. And right in there is a jewel where you talk about box-checking investment style. I love that phrase. How many people are out there just checking boxes right now in active management?
I'd hope not a lot in active management. I think we see that pervasively in passive management. Where the exercise is predominantly box checking. Of course, the passive guys don't have valuation frameworks. I like to think of them as being on the bus for free and driving it from the back. And I think our role as active, engaged managers with judgments around valuations and business, we have to be the governance agency for the market. And I think as the passive percentages of stocks increase, who provides the corporate governance watchdog?
Charles, let me just jump in here, because I think we have a significant piece of news to bring to our viewers and listeners. Now, this is according to a South Korea official. North Korea is said to be open to denuclearize if its regime safety is guaranteed. Now, let's just put this into context. This is after the North Korean leader, Kim Jong-un, spent more than 4 hours with the South Korean president in special envoys late yesterday. And this was his first meeting with officials from the south of the border since he took power in the late 2011. Charles, if we focus on this piece of news, what does this mean for the markets? There wasn't really a kind of tail risk of something escalating in the Korean Peninsula, but should this give a lot more comfort to the markets that nothing, at this point should go worse than it is now?
I think markets always worry about tail risk and uncertainty, and to the degree that we have a more cooperative regime environment between South and North Korea and the rest of the world, that's a healthy outcome. And so on balance, it should lower equity risk premiums and provide buyers of equities with better risk-adjusted returns, if it's true.
Charles, yeah, if it's true. I mean, we understand, again, you're absolutely right. This is something from, South Korea, but we're seeing a little bit of a move actually in 10-year Treasury. I don't know if we have that chart. I will do it up.
I'll work on it, Francine.
You can kind of see it change. Yeah, there's a move in the last couple of minutes. What does it mean for central bank? What does it mean for Fed policy thinking?
Well, if this is true? If the move's real, it's likely an indication of better global growth. And that's been the story for this year. You've got better real economic growth coming from both the U.S. and the rest of the world, and more stability in that part of the region, more stability with China and the U.S., etc., is all good for global growth and good for earnings and good for risk assets.
Two-day chart of the 10-year yield. Again, the two-day chart with a break right there. Up we go yesterday, stability. And you see, Francine, excuse me, this nice move up to a higher yield, 2.89% on this important headline out of South, and I would suggest North Korea as well. These are the exogenous shocks. How do you handle Washington? I mean, what we witnessed, Charles, yesterday afternoon, I'm sure all of you at Neuberger Berman were glued to your gazillion Bloomberg terminals that you have watching the news flow. And basically, it's one part, you can't make this up. And two, this has nothing to do with what I do for my clients at any investment shop. And yet you have to take it in. How do you do that?
I think you've got to have a framework for handling the headline news, and you've got to kind of distinguish between fact and fiction. Of course, the devil's always in the details, and you can only judge the details once you have the rules of the game, and we don't have that yet. I think the market in general has handled the noise out of Washington in a very productive way over time. It took some adjustment, but I think now we've handled it reasonably well. But look, you've got to have a framework, and I'd say our framework as it relates to the president is threefold.
Well,
we believe he loves America, we believe he loves business, and we believe he loves a deal. And across those three things, we think about the news flow.